Hey everyone, and welcome back to CCessvault. Investing in stocks can be a smart decision, but sometimes it can be hard to know which ones to invest in. Ideally, you're going to want a stock that is guaranteed to grow in the coming years. There are the obvious giants like Apple and Netflix, but we're going to be checking out lesser known hidden gems. Today, we're going to be talking about the top 5 stocks with huge growth potential. Make sure you stay until number 1, as you don't want to miss a great stock that could make you rich. Number 5. Chegg, CHGG. Online education is a great tool. This is becoming more and more accessible to students all around the globe, and today it is almost a necessity due to the global pandemic. Chegg is an online learning platform. The site is subscription-based, and they offer many services such as textbook rentals, tutoring, on-demand homework help, and tools that are beneficial to students. Chegg is currently at $73 with a 52-week low of $25.85. Chegg's prices were sitting at around the $30 to $40 range until May, when it had a huge spike that had it at around the $60 mark. Since then, it has been at an all-time high. Their current market cap is at $8.25 billion. Currently, they have about 8 times the current assets as they do their current liability. Chegg's revenue has been seen to rise in the past 4 to 5 years. Their earnings are also rising. Online education is a trend that will keep going up over the upcoming years, so that's what makes Chegg a great buy. Learning isn't that traditional anymore, and the way Chegg's platform is set up helps them to take advantage of this. Chegg has multiple subscription deals to choose from, making it flexible for students looking to use it. One example is Chegg Study. At $14.95 a month, students can have textbook solutions for 9,000 different textbooks. Chegg Writing is $9.95 a month, and so is Chegg Math Solver. Along with these subscriptions, there is also a tutoring service available. These subscriptions make up around 75% of Chegg's revenue. At the end of quarter 1, Chegg had around 2.9 million subscribers. This subscriber base grew 35% from last year. Their services are affordable, and they have many great tools. This is what helps them to grow and gain such a large audience. Their tutoring services offer unlimited video chats for only $14.95 a month. What a great deal! Another thing to note is that Chegg's rate of growth has been going up and up each year. In quarter 1 of 2018, Chegg's rate of growth for the previous year was at 22.9%. Quarter 1 of 2019, it was 26.6%, and in quarter 1 of 2020, it was 35%. They're also expanding internationally. They are mostly based in the US, but virtual education is catching on globally. There is a huge untapped market that they have yet to reach. Education is starting to move more online, and that's why it is important to invest in Chegg now, as it will definitely be growing in the next 10 years. Number 4. Visa, V. Visa is the largest payment network in the world. Visa's stock is currently at $195.09 with a 52-week low of $133.93 and a 52-week high of $214.17. This was a company that got hit hard by the pandemic. So, looking at their trend, they had a huge decrease in price around February. Since then though, they have been slowly rising to nearly all-time high points. Their market cap is at $434.859 billion. They have a PE ratio of 35.63 and a dividend of 0.62%. Visa's PEG ratio is at 2.42 and their price-to-book ratio is at 14.18. They of course have a high profit margin, with it being at around 52.26%. Their return on equity is also extremely great at 36.25%. Their current ratio is at 1.25. Now, Visa is looked at as a strong buy. In quarter 2, Visa had a revenue of $5.85 billion, and this exceeded analysis expectations. During this pandemic, people haven't been spending that much money, but it is great to see that Visa is still doing really well. For this company to make money, people have to be spending money. A reason to buy Visa now is due to their transition to online transactions. Today, people are using less cash and have switched over to digital payments. This change has been slowly happening, but the pandemic really helped it to come out into full swing. Visa is big on share buybacks. Visa has actually repurchased around 20% of their stocks over the last 5 years. This reduces the amount of supply, therefore it raises the price of the stock. Visa is definitely a company that will have good growth well into the future. Their prices are a bit high at the moment, but it may dip slightly in the future. Visa is a strong company that is great for the long term. They are bound to continue to do well. Number 3. Pinterest, P-I-N-S. This is a social media platform meant for sharing images and mood boards. The images mostly consist of pins and boards which can be saved and shared by users. For example, if you're redecorating your home and need inspiration, Pinterest is a great app for that. Currently, Pinterest stock price is at $26.08. Their 52-week low is at $10.10, and their 52-week high is at $36.83. This shows just how much this company's prices have dipped and risen. At the beginning of February, Pinterest's share price was at around $25. During the pandemic, their prices dropped drastically, but since then, they have risen slowly back up to the high point. They have a market cap of $14.116 billion, and Pinterest's current price to book ratio is 6.98. Interestingly enough, their profit margin is at negative 120.48%, and their return on equity is negative 105.50%. Despite the negative numbers, they have a great current ratio, which is at 11.6. Pinterest has the potential to be highly growing. They could expand to e-commerce and international markets. Pinterest is not quite at the level of other social media platforms, but they are definitely getting there. It isn't a platform for networking, but it has more potential for e-commerce. The growth of Pinterest is happening extremely fast. In the last 5 quarters, Pinterest has tripled the amount of users on its platform. Most of this growth is actually happening in its international markets. The average revenue per international user has doubled in the past year. Users share what they like with others on this platform, so that's what makes Pinterest perfect for e-commerce. Half of the users on the app actually stated that they use the platform for shopping. Their user count isn't quite at Facebook levels, but they are definitely more of a shopping-centric app. Because of the shopping aspects of Pinterest, they have great potential for advertising revenue. Advertisers are going to want to advertise on an app that is used for inspiration for things to buy. They currently aren't making any money, but they still have a high potential for growth as they work on monetizing their audience. This will pay off in the next 10 years, and that's what makes Pinterest a great long-term hold that could possibly triple in the next decade. Number 2, Dropbox, DBX. Dropbox is a great tool. It's a file hosting and cloud storage platform that is great for those who need to save and share files. This stock might not be the first thing you think of when you go to invest in stocks, but it sure is a great option to consider. Dropbox's current stock price is at $22.89, with a 52-week low at $14.55 and a 52-week high at $25.17. Their market cap is at $9.46 billion. Dropbox, unlike many other companies, actually benefited from the global pandemic. This company saw a huge surge of interest after many switched to working online and from home. From the first half of March, Dropbox started gaining momentum, which helped it rise in price. Many people needed ways to share files, and with brand recognition, Dropbox was there. It also helps that it is quite simple to use. One great thing about Dropbox is that it is used by international users, so this makes it a very useful platform worldwide. Thanks to Dropbox being a reliable platform during the pandemic, many people will most likely continue to use their services after the pandemic, and this is what makes Dropbox a great stock to invest in. It has huge growth potential over the next decade. Number 1. Kroger, KR. By revenue, Kroger is the largest supermarket in the United States. They have around 3,000 locations and about 500,000 employees. Currently, Kroger's stock is priced at around $33.85. Their 52-week low is at $20.70, and their 52-week high is at $36.84. Due to the pandemic, Kroger actually did quite well, and this is because people rushed over to grocery stores to stock up on groceries and supplies. Their market cap is at $25.237 billion. Their PE ratio is at 12.38, and their dividend is at a mild 2%. Kroger's PEG ratio is at 2.05%, and their price-to-book ratio is at 2.91. Their profit margin is slim, like many other grocery stores, at 1.66%, although they do have a high return on equity at 21.96%. Kroger's current ratio is lacking though, with it being at 0.83. In just the past year, Kroger's revenues have seen a huge rise, with it going from $37.25 billion to $41.55 billion. People are cooking more at home due to the pandemic, and this means they need to buy groceries more often than they used to. As safety precautions loosen, Kroger expects revenues to taper. Kroger has lowered their net debt ratio to 1.8 times adjusted earnings. This lowered from last year's 2.5. Kroger and Roku recently partnered up for a new advertising campaign. They are using Kroger's sales data to better target customers. While this doesn't help Kroger in the long term, it does show that Kroger has a ton of important data to extract from their customers. Kroger is also investing in digital growth. This will help them with their long-term vision, and this benefits its online shopping experience as well as its app. Many analysts see Kroger as a company that will continue to do exceptionally well in the stock market. Kroger has the potential to continue to be a huge player in the grocery industry. If they continue to invest in their online aspects, we can expect Kroger to grow and earn you a huge profit in stocks. Thanks for watching. While you're here, go ahead and click on one of these 2 videos on your screen. See you there.